Internet's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we're taking a look at what could be the new golden age of relationship banking in our world, our corner of the internet. We have multiple players who now have relationship style programs where you give them more money. They're just happy to give you even more rewards. But who offers the best rewards for you? Who's got the best program? And what are some strategies you should take a look at when considering who to make your next relationship bank? So all that and more. So of course, if it sounds interesting to you, go ahead, press the subscribe button and let's get to work. Now, first things first, we'll define terms here in case you're new. So obviously all banks want your money. They use the word relationship, to describe their partnership with the customer, but it's not that deep. It's a vendor providing a service, and that's really it. However, there are a handful of banks, and we're going to take a look at, they're not all banks, some are fintechs, but we're going to take a look at Robinhood, SoFi, US Bank, Bank of America, and PNC as the major players right now that I've been able to find who are what I would call legitimate relationship banks, meaning that for the relationship, you get more than something else. For example, Chase would just be a vendor because I can get a Chase checking account. I could give them $100, $200, $300,000. I'm not going to get anything different, right? Sure, there's the private bank, private client world, but the only thing you really get there is access to the JP Morgan Reserve, which is a silly card anyways, considering it's very similar to the Sapphire Reserve. So that's just a customer and a vendor relationship. These banks we're talking about, they function like, hey, if you give me more of your money, the rewards you get across multiple products get better. So to me, that is a relationship bank. And again, Bank of America is probably the longest standing example. They've been doing this for like 12, 13 years now, I want to say. We definitely have some new players in the space. So we're going to take a look at all of them. I myself have been a member of US Bank, short-lived, and a member of Bank of America's program, and I've considered moving to PNC and even Robinhood as well. So that is what we mean by relationship bank. Now, I do want to I'll walk you through briefly how I set up this video, because if you're going to compare 4 different programs, it would make sense to take all the products that they offer, put them in a table, and kind of compare the products and see which one, who wins, who offers the best products across the board. Because what you're going to see is, again, because you're a member, they'll offer you better rewards for credit cards, higher interest rates, better finance pricing on mortgages and auto loans and things like that. However, when I went through these and having been a member of a few of these, each one has a star product or two that stands out, which would be the reason you go and pick that one. So we're going to focus on how to get in, and then I'm going to pull forward those star products that I believe they offer. Obviously, they want you to use their products all the time, they're saying. So it's basically set up to say, hey, you're with us, so don't bother shopping around because we're going to give you the best option we can because you're in our program, which is true to an extent. But if you want the best rates or best product pricing, you're going to have to shop around. I'll give you 2 examples and then we can get into it here. Again, just so you know the thought process as you think about where you want to land. You're going to see savings account rates. You're going to see a lot of folks saying, hey, we'll give you a high yield savings account with our program. And that's really cool. That's, there's nothing wrong with that. However, none of these go above 5%. I don't think they go above 4.5%. At the time of taping, but I know for a fact there are many credit unions out there who offer 5% checking accounts. I saw a local commercial one that offers a 7%. Now, yes, those are going to be capped with balances and this, that, and the other, but the point being is, without looking that hard, you can probably do better on the majority of these products. Another one you're going to see is mortgages. A lot of times they'll say, hey, we'll give you $500-$600 back on your mortgage at closing. Well, as I say, I used to work for Quicken Loans for quite some time and would give you $500 back any day of the week that you wanted it. Every single employee during my time there had a referral link that they were really encouraged, almost badgered, to give out to people so you could get $500 back at closing. To get the best price on a mortgage, you've got to get 3 or 4 different loan estimates, shop it around between lenders, and you also have to shop your title fees. I think we get the point there. That's why we're not looking at a table. I'm just pulling forward the best examples for you. And then at the end, we'll go through and figure out where I land and where I think you might want to consider parking your money. So with that, we'll go through and take a look at their site, walk through all of it. I figured we would start with no particular order really, but we'll start with Robinhood. That's who I have up first. So here you have it. We'll go to their site. see what they're talking about. So obviously, supercharge your next move. Their program is called Robinhood Gold. It's $5 a month or it's $50 a year to unlock gold. So again, as we said right there, first example, you can see high yield cash account, 3.35%. And they're saying it's 8 times higher than the national average. Again, that's why I'm not really looking at that one. They're talking about premium rewards, retirement boost. So for me, go right off the bat, if you were to be Robinhood Gold, retirement boost is one of their standout features. A 3% match on IRA contributions applied automatically to your retirement savings. So this year in 2026, the most you could contribute is $7,500. If you match that, you do that full amount, you're going to get 3% automatically applied. I haven't seen that offered to anyone else, so this would be the star of the show for me. And again, some of the other stuff here, again, some of the stuff might mean more to you than, it does to other people. You kind of have to make your own judgment there. But again, that's the biggest one. Again, sure, they're offering 3.35% APY. Again, depending on when you're watching this, could be more, could be less. That whole thing. The other big one here is going to be their credit card. That's the other standout feature. So if you can get it, they have a 3% cashback card on all purchases. Now, it's not quite all purchases because it doesn't include things like tuition, taxes, property taxes, income taxes, cash equivalents, insurances, things of that nature. So it's not quite on everything. They are very sensitive with it too, as far as like your spending. If they feel you're spending too much, who knows what too much is, but just keep that in mind. Also, you can see you can only join the wait list. This thing's been out for quite some time, so I'm not 100% sure how long it would take you to get it, but those, again, are going to be the two standout features. So for Robinhood Gold, you're looking at $50 a year. You got the 3% IRA match, and you've got potential access to the Robinhood Gold credit card of 3%. There are other things in here. I've seen folks say, hey, you get a certain amount of basically margin for free, and you can go in and people will put it in something super safe like SGOV, for example, and they'll be able to use that free margin to make back their annual fee. So again, you can get more in depth with it, but as we said in the beginning, just pulling out their what I believe are their two biggest features. That's going to be it. Again, you can value the rest of these however you like, but if I was looking at Robinhood Gold, that's what I would be looking at for sure. So that takes us to the next one, which is SoFi Plus. Now, SoFi Plus has changed a little bit. You used to be able to get in with $10 a month, or I believe it's like a $500 direct deposit a month. That part is gone, and now it's straight pay to play. Like Robinhood, Robinhood is pay to play as well. This one is also pay to play, but it's double the price. You're looking at $10 a month, so $120 a year. And you can see right there, 4.5% APY up to 20 grand. So as where Robinhood, I don't believe had a cap on it, but theirs was significantly lower, a full percentage, almost a percentage and a half lower, the APY there. So again, it's one of SoFi's star features. I would say I think they're the highest, but again, just remember the cap. Now, a lot of them are going to have a lot of the similar perks. The credit card here is significantly less. I think it gets bumped to 2.25, I want to say. It's a cashback credit card. It's a base 2% credit card as well. So if you're into SoFi Plus, you get a little bit extra. And then again, they're all going to give you this table to compare things. So they do have this one. I will say another good one here is a 1% match on eligible deposits into taxable SoFi Invest accounts. So as with Robinhood, you have the IRA. You also have a 1% over here. So this is not retirement accounts. This is taxable SoFi Invest accounts. 1% match on SoFi Bank. And if you click these links, of course, I thought it would take you somewhere. I guess it doesn't. So there you go. The 10% boost on cashback rewards earned through select SoFi credit card. They have two credit cards. I believe it only applies to their 2% back credit card. So really not much to say about this one. There's more of the benefits here. What these mean to you is debatable. Like we said, mortgage, more discounts. So a lot of stuff you can find elsewhere. $50 Rakuten welcome bonus, 20% off, more TurboTax you can find. As the mortgage ones are for borrowers, see $500, but you must be a SoFi member. $200 on home equity. So again, a lot of stuff I think if you shopped around, you could find better. I think SoFi is probably the weakest of them, given what you pay to get in. But again, you can let me know if you use it down below and what your thoughts are. When it was free and you could do the direct deposit, I think it was very advantageous, but now not so much. So the next one, veterans of the show will laugh, but the next one is US Bank and Smartly. And like, this is almost the easiest one to cover because this is the only benefit you get. Smartly applies to like one product. So how do you get in? This is technically no longer a pay to play. Well, it tells you right here. So you need a US Bank Smartly savings account and qualifying balances in a US Bank Smartly checking account. So it's weird that they write it like that. So you have to have a savings account, but the money you hold has to be in the checking account. So I don't know why they do it like that. And you'll notice the money has to be in the checking account. You'd have to keep 10 grand in there to get to make the, so it's a base 2% card. Put 10 grand in the checking account, you're going to get 2.5%. 50 grand gets you 3%, and 100 grand gets you 4%. And that's really it. There's no additional benefits. They might tell you there are, but I mean, as far as what we're concerned with, this is the star of the show. And funny enough, as a quick aside, I do have this card. There was a run for about 8 months where you could have the money in a brokerage account. So I did it, and then eventually they ended up changing it, so it could not be for new customers. And they kicked some of us out. Some people got grandfathered in, but they stopped that. Now it has to be in a checking account, which is basically known as dead money, because the money's, I mean, sure, it'll earn a tiny, minuscule amount of interest, but it's basically dead money. And there's also a $10,000 spend limit each month. Anything after that would just earn the base 2%. They also stopped counting things like taxes, insurance, tuition payments, things like that, your large expenses, if you will. So there's really not much to say about US Bank. They kind of kneecapped themselves and mostly took themselves out of the running. I look at the credit card now as a collector's item from back in the day. Moving right along to the one near and dear to my heart, Bank of America. It used to be called Preferred Rewards. Now it's BOA Rewards. They've got happy people. We'd like to see that in our promotional material. There's even a full video you can watch, more happy people. So you can see right here, here are the tiers. So member tier, that's just, you just exist. We'll get rid of that. Member tier, nothing really to write home about. Preferred Plus is 30 grand combined average 3-month balance. You can see the rewards change down there. Preferred Honors, that's what I am now. I used to be Platinum Honors, but now it's Preferred Honors. 100 grand. And then Premier is $1 million plus. You can even tell the Premier, it scales, right? So if I go to Preferred, you know, it's not bad. She's around some boats, maybe one tiny yacht in the back. And then Premier, $1 million, we're going black tie. Funny. So again, you can see the benefits. The main draw here is two things. One, the money can be in your brokerage account. To qualify, you simply need a checking account. I have a checking account. I leave $1 in it to keep it open, and then the rest of the money is in an IRA account I have with Bank of America. So the main benefit here is really going to be the credit card. So unfortunately, the credit cards the perks dropped a little bit, but you know, right now with the version we're dealing with, I was gonna see if I was gonna tell you, it would make the it would make the unlimited cash card become 2.25% back, and it would make the customized cash card, which I have 3 of, the top category that you choose be 4.25. If you could make it all the way up to $1 million, then you're looking at, it would be 2.62%, and it would also be 5.25 back for the for the customized cash ones. So really, that's it. Again, they offer the similar things, no checking fees. I guess the other one benefit you could look at is this subscription credit, up to $100, $80 annually in credits for streaming services you use. So the one I have, again, for Preferred, it's like basically comes out to $8 a month. You can use it towards like at the time tapings like Paramount Plus, the Wall Street Journal, and a few others. It's not the best perk in the world. So the main driver why people go here is because of the credit cards. Again, they're going to offer you the same things and the benefits, but here it's the credit cards. So the last one up is PNC. Again, two happy people. We like to see that. So if we just go straight to it, tiers, works very similar to Bank of America. You need a checking account, but the money can be in a brokerage as well. So everyday benefits, that's just if you're a person off the street. They have a silver tier that starts at 25 grand. Again, we're kind of speed running as we go through this. Same deal, you see, we've all got mortgage discounts, and they just kind of scale as you go. Gold tier comes into $100,000, and then platinum tier is at $500,000. So the star here again and granted, this one has been around the shortest amount of time, is that again with the credit card. So the 2% credit card PNC has at gold, it's going to be 2.5. At platinum, it's going to be 2.7. The gas card, wait, it does other things. I'll put these on screen for you, but the green card, the cash rewards, I believe it is, you're looking at like 5% for gas at 100 and 5.4% at platinum, which isn't bad by any means. But again, that's really the star of the show for these. They're offering very similar things overall, nothing too crazy. So I think they do offer the most on your cash reward for your mortgage. But again, we covered the mortgage deal as well. So there you go. That's what we have for you, how you get into all those programs. So if you take a look at it overall, I think we can break these down really easily on which one is which one is for who to start. So Robinhood, I'm a big fan of Robinhood Gold. I fully expect that price to go up. I mean, especially if you look at what Robinhood Gold is offering compared to SoFi and compared to how much money you need to get into the others. But for right now, it's $50 a year. I think if you're on the younger side or you're probably under $100,000 in assets, you're gonna want Robinhood Gold. And anyone that 3.5% would definitely help you, but if you can get access to that 3% card, especially early on in the game, I don't think you're going to be missing paying property taxes, paying income taxes, and paying insurance, that sort of thing early on. And I don't think the rest of these are going to be worth it unless you can get to a minimum 100,000. Now the good thing is it doesn't take that long to get to 100,000 because we mostly do it through retirement accounts. So if you work for a while, you have a decent enough match, and you stay long enough to go through your full vesting periods, you'll have the money to transfer over when you move jobs anyway. So Robinhood Gold, easy recommend for me. There's also an argument, we'll talk about it a little bit later, but there's also an argument to start using Robinhood Gold once you're solidified at one of these other ones as well. But Robinhood Gold, easy recommend. I think it's pretty good. I just really wish they could figure out the credit card solution by now. We're almost 2 years in, I want to say, and it's still very hard to understand how you get the card. They're still very sensitive to how you use the card, which is weird considering it's designed to be a card used for everything. If you spend a lot of money, they might try to say it's business spend, but it's designed to be your only credit card, which is somewhat silly of them. Now, SoFi, I think is an easy pass due to the price to get in, the pay to play. You could definitely go through and make the argument. You can make the argument for the higher APY and the 1% match on your brokerage accounts, not on the taxable brokerage accounts. You could definitely make the argument, and I could see how someone could work this into their setup. But if I'm choosing from these 5 options, I think for me, SoFi is an easy pass. When you could use a direct deposit, I think it was definitely competitive, but the pay to play, I think Robinhood is better. The only thing is just when you can get that credit card. US Bank, look, I mean, the easy thing to do is going to say, don't do US Bank. It's terrible, which is true. However, if you're a newer person, you're not normally here, I will say if you're someone who just wants to be able to open their account and see their money, and you're not going to put $100,000 anywhere else, then you might as well just do it at US Bank. And I know, I wouldn't recommend it because it is dead money, but at the same time, there are those people out there who are like, that's just what they're going to do. And that's, I wouldn't say it's fine, but it's your choice. And so if that is you, then I think US Bank is clearly the easiest place to go to get 4% back. Again, their card's somewhat limited and won't work for a ton of purchases, but honestly, if you're that person and you don't care about the lost opportunity on $100,000, you probably don't care about the lost opportunity on, on not being able to get earn additional points on, tuition and taxes and insurance and things like that. So I wouldn't recommend US Bank, but for those of you and you know who you are, there's no reason to pretend opportunity cost this, that, and the other. Just go for that one and be done with it. And now between Bank of America and PNC, I think it's definitely debatable. There's an argument for folks who are mad at Bank of America because they just nerfed their rewards. I have Bank of America. I was at $100,000, so I used to get the high percentages, the 2.62 and the 5.25. Now I get the 2.25 and 4.5. I've considered PNC. I'm going to stick with Bank of America. Why stick with Bank of America? For me, I think it comes down to, again, their star product is the credit cards. That's why I joined. And I think Bank of America's credit cards are more useful than US banks, even at a lower valuation on multipliers. I have 3 customized cash cards, and they have online as a category. They have other categories, right? You basically pick your category of the ones they offer, and then you can even change that category once a month. So for me, I think it works to stay there versus PNC's got, the card does other things, but we know it is the card that, earns on gas. I can cover off gas. There's ways to get 5% back on gas through a AAA travel advantage. For example, if you have a custom cash, folks like to do that. Folks like the Costco card, for example, the category card. Sometimes if you have a Discover and a Chase Freedom card, eventually you'll probably have gas at 5x twice a year, for half the year, I should say. So for me, I think Bank of America, just for me caring about credit cards, they offer the best setup. In addition to that, PNC doesn't have travel cards, so if you're into travel, simple travel, not really rewards-based travel, then you're also going to want Bank of America. Bank of America also, they have a slight tie into their Alaska card. So again, if you like travel, if you have a relationship with Bank of America, you can get additional value from their credit card. You don't have to be preferred rewards to trigger that, but just as an example for travel. PNC, not bad at all. So I think PNC is for someone, again, if you're into credit cards, but you're not going to want a ton of credit cards, and especially if you could get to $500,000. If I could get it to $500,000, then I might have considered PNC more. But going from 2.25 on my catch-all Bank of America to 2.5 really isn't that crazy of a leap. So for me, I'm going to stick with Bank of America. If I could get to $500,000, I would do it. PNC is also not known to have the best user interface. It's actually the worst user interface I've ever seen. That was about 2 years ago since I've used them. Now, Bank of America is definitely nothing to brag about, but, I think you'll get used to the user interface. But for me, I'm going to stay with Bank of America, the winner, simply because their flagship product in their program is the credit cards. And I think their cards are better than PNC's right now, especially because you can have multiples of them. So that said, if you want to get into it a little bit deeper here to close us out, I think there's an argument to say I would exclude SoFi, exclude US Bank altogether, and between the three, Robinhood, Bank of America, and PNC, especially Bank of America, the thing that I really could do is say, hey, look, there's no reason to have more than 100,000 with Bank of America, so you can still peel off 200,000, send it to PNC, or another 100,000 to PNC, still get their unlimited cash card at 2.5%, and kind of do the best of both worlds. You can definitely do that. So why didn't I? Well, PNC is very sensitive. When you can't even apply for a credit card directly. You have to become a customer first, then you can apply, which means open a checking account, then you can apply for a credit card. I've actually applied for that green credit card twice in branch with a branch manager. It still had to go to back office review, and I was denied. So for me, the opportunity cost, and we might make a larger video about this, but the opportunity cost of waiting, gardening to get underneath inquiries and new accounts open to get a PNC card that doesn't have an intro offer, I feel like I would just do better off if I got one more credit card with a high intro offer, and that would wipe out all the additional cash back I was going to make from 2.25 to 2.5. Just like that. But you could definitely play both of them, and that's probably the answer, is to play both of them. Stick $100,000 with Bank of America, move $100,000 to PNC, and you can get all the cards you want over time. Then now the other part of that is with Robinhood's IRA match, there's also an answer. Once you get $100,000 with one of these, start making your contribution to Robinhood to take advantage of the 3% match. Now, I believe there's rules on how long the money has to stay with Robinhood, so you're not going to move it around a ton, but basically, think of it like a vesting period at your employer, right? You can't just do it, get the 3%, and then split. They're going to want to see you stick around for some time, or they're going to claw it back. But there's also, again, as we said, there's no need, because Bank of America kind of messed up, in my opinion, made the gap so big, $900,000 gap. There's no real reason to stick around over there versus just getting the 3%. So that's probably the expert mode, is to mix and match to make sure you're getting the best from all of them. And that's the great thing about competition. And while I'm glad to see PNC step up, to compete, because one of the things Bank of America probably could nerf theirs because there was no other competition around. So maybe PNC will make it a little bit more difficult for them. So overall, long story long, that's my take on the relationship banks. Each one has a star product or two, and basically you're picking which star product means the most to you. And then again, I would say even though they want to sell you on a relationship, unless you're just incredibly lazy and don't want to shop around at all, you're still going to get the best of each product if you look around. Again, that competition thing. So for the time being, I will be with Bank of America. I'm still sort of considering setting up a PNC move, but for right now, I'm going to stick with my 403 customized cash and my unlimited cash. So sound off down below. Let me know which bank you decided to stick your relationship with. Which products do you take advantage of? Which ones do you think are the hero products? Or how do you string a lot of these together to get the best of all the programs? Love to hear from you down below. But anyways, guys, that'll do it for this one. So, of course, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. So we're posting content just like this every single week. Of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. And as always, every single week, or every single day, on Profitable.com, which is, of course, the channel's blog. Link down below for you and on the channel homepage. We have the latest news stories, bank promotions, and credit card offers. So, just start your relationship with us. Why not? Surely will be profitable. Anyways, guys, that'll do it for this one. As always, thank you so much for watching. I'll talk to you very soon in the next one.